Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news again. And of course, it's Nick Bendel bringing us that news. Welcome, Nick.
Thank you very much for having me. You're right, it is me. You keep letting me into the recording room.
Yes, well, it really can't be anyone else, Nick.
One of these days you'll learn your lesson, but you keep letting me in and I keep showing up.
No, it wouldn't be the same with anyone else. So, no, it's all about you, Nick. It's all about you.
Well, I do like the sound of that. Given that it's all about me, would you like me to tell you what I've been up to over the past week?
Oh, fine. You're going to tell us anyway.
Well, my company, Hunter and Scribe, we write content for finance and property professionals throughout Australia. And we recently signed 2 clients, a mortgage broker and a property valuer, and both of whom are now receiving 3 LinkedIn posts per week from Hunter and Scribe.
Fantastic. Well done. And those LinkedIn posts are very good. Can they use them on our other platforms as well?
That is a very good question. They can, however, the reason I'm calling them LinkedIn posts rather than social media posts, they tend to be more effective on LinkedIn because the clients of my clients tend to be hanging out more on LinkedIn than other social platforms.
Okay. Well, yeah, I think they might do well on TikTok as well.
Indeed. Our clips from our podcast sometimes do quite well on TikTok, I've heard.
They do, actually. It's now that you brought that up, yes, there's a lot of debate that goes on in the comments. So, yes, it's quite interesting. But while you were having your little say about your past week, Leifield, which of course is my business, we're a national property management business. We've been pretty busy in the last week too, Nick. I don't know if I mentioned it last week to you, but we've had more properties on the market for lease than ever in the history of the business, which is now about 18 years that we've been going. So we've had, and of course, over the Christmas break, not a lot got done. We tried to, but not everyone's out there looking for somewhere to lease at the moment. But so we've been pretty busy in the last week. We got about 5 or 6 properties leased last week. We got another 3 done today off applications from over the weekend. So it's been pretty busy.
Well,
so
congratulations.
Good start to the year.
I'm not surprised because I know what a fantastic operation you run, and also you're very experienced, and that really does count for something.
Oh, thanks, Nick. You know how to say all the right things, don't you?
I do. I know how to butter you up. That's why you keep letting me into the room.
Very true. So, have you brought us some news this week, Nick?
I have got 3 really interesting stories for us to discuss. The first one is capital gains tax discount back on the political agenda. New South Wales Treasury has told a federal parliamentary inquiry into the 50% capital gains tax discount that, quote, there is a strong case for reviewing the CGT discount to ensure it is fit for purpose, supporting fairness, efficiency and sustainable economic outcomes, and better aligning with contemporary housing and equity objectives. When the CGT discount was introduced in 1999, it was meant to encourage long-term investment, but New South Wales Treasury said it had heightened investor demand, which had placed upward pressure on property prices and worsened affordability. New South Wales Treasury added, these effects have in turn made it more difficult for first-home buyers to enter the market, contributing to declining home ownership rates. Furthermore, the benefits of the CGT discount are highly concentrated among higher income individuals and are amplified through investment structures such as trusts, reinforcing wealth inequality. If the CGT discount was reduced, New South Wales Treasury said that would lower the after-tax returns to property investment, which would reduce investor demand and either reduce property prices or slow price growth. Owen, this is where you get to fire off. So New South Wales Treasury says the CGT discount allows property investors to enjoy stronger returns, which means investors can bid more aggressively, which puts upward pressure on property prices, which makes it harder for first home buyers to enter the market. Are they right or wrong?
Oh, well, let's break this down for a minute, Nick. What was their first point? Which means investors can bid more aggressively. Well, it's I don't know how they can bid more aggressively on something that they haven't made money on yet. It's yeah, so I don't quite understand where they get that logic from. If they're referring to maybe an investor who's made money on another property, and they've sold that property, and as such, they've got a bigger discount. They've got that discount on the CGT. It's it's firstly, the CGT discount is there to allow for longer term investment. So it's encouraging people to hold on to it for longer. So if they've got that equity in the property, most investors I've dealt with for, well, it's well over 25 years now, Nick. Most investors are taught to not sell the property and use the equity that they've got. Now, whether they've got the uh, CGT discount or not, that wouldn't affect them if they can borrow against the equity to then go out and bid more, as has been accused of them of doing aggressively. Then let's which puts upward pressure on property prices. So yeah, I think that's a bit of a furphy. Um, and then they're saying that makes it harder for first home buyers to enter the market. So on that specific point, they are wrong. I don't know any investor that sells to get the discount, which means that they actually have to pay tax. So no one likes to pay tax, whether at any rate. So if there's an opportunity for a investor to hold on to that property that they've got, not sell it, draw down on the equity so that they can then go and buy another property, then it's more worthwhile for them to not sell at all
Okay,
and get that discount.
Okay, following on from that, New South Wales Treasury says it makes sense to review the 50% discount, given, quote, the scale of the concession, its concentration among wealthier investors, and its role in distorting investment behaviour. Do you think a review of the CGT discount is reasonable?
I think doing reviews on all property taxes, and in that case, all taxes in general, but specifically property taxes are a good idea. And that's specifically about the CGT discount. I don't think it will make much of a difference to the big problem that we have of a lack of supply of properties in the market. I think a bigger issue to deal with is stamp duty and land tax. And we could make so much of a bigger issue and bigger impact around those two taxes. But it's funnily enough, this is coming from New South Wales Treasury. And it's state governments that actually make the decisions around stamp duty and land tax. So are they just trying to push the focus onto CGT so that them as a state don't have to do anything to try and fix the problem? Yeah, maybe that's it.
You're a very cynical man.
Oh, no, I've just been around for a while, Nick, and I know how the tax system and political system works.
The CGT discount, the intention when it was introduced about 25 years ago was to incentivize property investment. And if we were, or sorry, not to incentivize property investment, but to encourage long-term investment, that's probably a better way of putting it.
Yeah.
If we were to agree for the sake of the argument that the government should incentivize property investment, I'm wondering, is the current system the best way to do it, or is there a better way to go about it than negative gearing and the CGT discount?
It's I don't know if you could say if there's a better way. There's different ways,
Mhm.
and it's and different ways have been tried to target specific areas that need more affordable housing in terms of rental housing. There was the National Rental Affordability Scheme.
Mm.
There was a number of other schemes as well that were brought in to be able to uh, uh, incentivize investors to buy in lower socioeconomic areas or rural areas, or provide housing to specific industry types of essential workers. So the funny thing about those is there's always loopholes that people can get around, but it's good politics, and so it was done. So there's lots of ways that you can incentivize for property investment. Um, the easiest and best way is through fiscal means, yeah, by providing depreciation benefits and so on. Um, Whether someone uses negative gearing, I mean, why anyone would be buying an property to be
Mm.
making a loss anyway, intentionally, really baffles me. But sometimes it does happen in the first few years of owning an investment property, but you can't sustainably keep a property that is making a loss. So, and most of the benefits from depreciation, which gave negative gearing its ability to hold a property longer term, were really wiped out by the Howard government and then the Turnbull government. So guess what? Both of those are on the conservative side of politics. So yeah, what has the left side of politics actually done to discourage property investment? It seems like it's more the conservative side, because yes, it was the Hawke and Keating government that brought in all of these negative gearing benefits. So, um, yeah, who's the pot calling the kettle black here?
Well, let's move on to our second story, and we're going to look at housing and property investment from a different angle. Airbnb reducing the supply of long-term housing, but not how you'd expect. A report from the Australian Housing and Urban Research Institute found that the number of listings advertised on Airbnb in Australia actually fell 11% between 2019 and 2023. Crucially, however, trends in hosted listings, i.e. where the owner stays in the home, and non-hosted listings moved in opposite directions over that period. While hosted listings decreased, non-hosted listings increased, which the report said, quote, marks a shift away from the original sharing economy model toward a more commercialized sector. Airbnb's original model involved owner-occupiers renting out spare rooms, which did not reduce the supply of long-term housing. Increasingly, however, the platform is being used by absentee landlords who are diverting entire dwellings away from the traditional rental market. The report estimated this shift in Airbnb usage may have removed 8,822 potential long-term rental properties from the market between 2019 and 2023, placing downward pressure on vacancy rates and upward pressure on rents. So, Owen, you are the property management expert, so I'm very keen to get your thoughts. Were you surprised to hear that the number of homes listed on Airbnb has been trending down rather than up?
Um, um, no, well, it's I was surprised that it's trending down, but it's but the answer to the headline, I was surprised by the answer to the headline
Mhm.
of it of supply of long-term housing, Airbnb reducing the supply of long-term housing, but not how you'd expect. So it's yeah, Airbnb, as far in our world, is a platform that uh, yeah, I haven't thought of it for a very long time in terms of someone who's hosting in their own home and renting out a spare room. It's for a long time, it's a platform for advertising a whole property for lease.
Well,
You know,
maybe that was the plot twist, that there was no plot twist. And that's what fooled you.
yes, but people who maybe aren't in the industry and aren't aware of those changes, might still think of Airbnb as, if you want to rent out a spare room for a night or two a week. So it's, yeah, no, not surprised and surprised all at the same time, Nick.
Excellent. Are you, I'm just curious about the level of inquiry you and Leifield get from people thinking about renting out their property in Airbnb. How much inquiry do you get, and has it been increasing?
Um, it's For us, it's probably been decreasing of the most recent years, but there's quite a few specialist short-term providers, and it is a growing industry. So a lot of people do just go directly to them. We've certainly got referral partners that we would refer to, and it's something that we can advise people on. And yeah, in a number of cases, it can work well. We've just actually had a few people. We had one client come to us last week asking about converting their short-term Airbnb property to a long-term one because it just doesn't seem to be working for them. So they don't always work, but and to be in terms of being better than a long-term solution. But in some cases or a lot of cases they can be. Yeah.
I'm wondering, should governments care that investors are listing properties on short stay accommodation websites? And if so, what, if anything, should governments do about it?
Well, I mean, it really points to a longer term trend and problem where does this mean we don't have enough hotel accommodation?
Hmm.
I mean, and if yeah, you can understand if you've got a destination property, like if you've got a property right on the beach, or you've got a property up on a mountain top, and it's more of a holiday destination. But if you've got a property in the middle of the city, that's do we not have enough specialists? Providers of hotel and service departments that are zoned for this. So, yeah, maybe it could be a zoning issue if they're concerned about more properties coming out of the long-term market. Then maybe it might be a zoning thing or something where they restrict the usage. So yeah, but that's up to government. I don't necessarily agree with telling people what they can do with their own houses. But if governments are concerned about the amount of stock for long-term rentals, then that's probably the only things they can do.
Supply and demand.
Exactly. And they got the ability to control both in those cases by permitting the use of short-term holiday lets or short-term leasing through platforms like Airbnb.
Let's look at supply and demand from a different angle for our final story. Home building approvals jumped 20.2%. There's been good news and bad news on the home building front. The good news is that the number of homes approved for construction in November 2025 was 20.2% higher than a year earlier, according to the
Woohoo!
ABS. Indeed. The bad news, though, is that translating approvals into completed homes is proving challenging, with Master Builders Australia reporting that the industry is struggling with skilled labour shortages and weak productivity, which are delaying or preventing many projects from progressing. Master Builders
Mm.
said, on the labour front, we have reported that current data shows that the construction apprentice pipeline is shrinking and leaking, with new starts down and more apprentices leaving than finishing. The domestic labour pipeline must be elevated by demolishing the university bias, building more VET programs in schools, and further expanding incentives for apprentices past December 2026. So, Owen, as we know, we've discussed this many times, the federal government is aiming to facilitate the building of 1.2 million homes in the 5 years to June 2029. The government fell short of its year one target and will almost certainly fall short of its year two target as well. But can things be turned around over the 5 years?
Well, 5 years should be long enough to turn things around, but they can't wait for the night before the fifth year to start going, oh, maybe I should start doing something about this. So yes, they need to pull their finger out.
Okay, maybe a philosophical question for you. If we are indeed failing to build enough homes, do you think that's a market failure or is it a policy failure?
It's I think it's a policy failure, and it stems back to the 80s, when we had the Hawke and Keating government suddenly tell the main part of their voter base that they weren't good enough by just being a tradesperson. They
Hmm.
should all go to university and get a free education, and then do nothing with it. Because that's what people were told, and that's what people aspired to do. Finish year 12, do their HSC, go to university, and get a degree in something. Doesn't matter what, because it apparently this piece of paper was going to do something magical to their lives. But it made becoming a tradesperson a fallback, or someone who was a failure. You couldn't finish school, so you had to go do a trade. And that's what happened. And now, what, 30, 40 years later, we're now in a position where the trades are looked at enviously,
Hmm.
because they've got the control of the marketplace. They've got a choice of jobs they can do. I mean, us in our everyday life of trying to get trades to do repairs and maintenance on properties. Yeah, if it's too small a job, they don't want to do it. If they don't like the job, then they don't want to do it. So we're in a position where we don't have enough supply of tradespeople to go around to actually build these houses that are getting approved. So yes, it's definitely a policy failure, because the marketplace has taken advantage of that, and you got tradesmen, and good on them for doing so, but you've got tradesmen who are earning more than lawyers and doctors these days in some cases.
So, as you pointed out, one reason we're not building enough homes is there aren't enough skilled workers. I'm wondering, though, if we can look at this from another angle. Uh, Building costs, they're too high. That's another reason we're not building enough homes. And one
Yeah.
reason building costs are too high is because builders are expected to meet certain quality standards. So, what about if we just lower those standards so we can pump out more homes?
Well, yeah, we don't want these houses to be falling over, Nick. Um, it's yeah, we want some sort of minimum standards, but there's plenty of buildings that are still standing from 50, even 100 years ago. But if you look at a lot of these building practices, have all been improved, in inverted commas, in the last 20 or 30 years, which has just added extra compliance and extra costs. But there's plenty of buildings that have been built 50 years ago and are still standing. So yes, we need to always improve our building practices, but let's maybe repeal one bit of red tape when we add another bit of red tape, so that we're just not adding extra cost and compliance for the sake of it.
You talk about older buildings still standing up, but last time I checked, the Colosseum in Rome is looking a bit shaky these days.
Well, yes, but that was built, I mean, a very long time ago.
And what about the Leaning Tower of Pisa? That's not even straight.
Well, that was even longer, I think. Yeah. So,
Yeah,
and that they, of course, aren't governed by Australian building standards. So,
that's true. That said, Leaning Tower of Pisa probably doing better than Opal Towers in Sydney.
Yes, no comment.
Well, on that note, shall we wrap things up and say goodbye?
Oh, is it that we there already? Well, thank you very much, Nick. 3 very good stories again. So looking forward to seeing what's in the news next week. Thanks.